In our strategy, we use a 5-phase framework. We focus on signals, not predictions, and we prioritize survival over being early. Markets still look calm on the surface, but underneath, leadership is shifting. That is where risk quietly builds. Late cycles do not end loudly at first. They rotate, compress, and confuse. Most investors miss that transition. This episode reviews an interview with Thomas Hayes. His focus is cash flow, not headlines. We recommend watching the original for full context. The biggest losses do not come from bad news. They come from reacting to noise, especially when fundamentals have not changed. There is talk about foreigners dumping U.S. treasuries. The actual flows discussed are very small. This does not break the system. Treasuries are core plumbing. They act like water in the financial system. Small sales do not drain the pipes. The real signal is coming from Japan. Long-term yields are rising. That changes global funding math. This is happening because money is no longer free. When borrowing costs rise, leverage leaves first. Crowded trades feel it immediately. For years, cheap yen funded global risk. As that trade unwinds, liquidity tightens. That pressure shows up in equities. Large technology stocks were funding sensitive, not broken businesses, but priced for easy money. When funding changes, leadership changes. Markets can rise while leaders fall. That is a classic Phase 2 signal. This is not a crash call. It is a compression and rotation phase. Phase 2, pressure is building. AI spending is real and growing. Returns take time to show up. That slows free cash flow today. Costs rise before benefits arrive. When that happens, multiples adjust. Even if revenues grow. Crowded and leveraged positions. Assets priced for perfection. Anything dependent on cheap funding. Boring businesses with cash flow. Real economy operators. Companies nobody wanted last year. Headline-driven rallies raise risk. Price still matters more than story. Chasing news usually ends badly. We tighten exit discipline. We review crowded exposure. We protect flexibility. No panic decisions, no all-in shifts, no narrative trading. Quick note, this is educational market commentary. It is not financial advice. Japanese bond yields, credit spreads, market breadth under the index. Late cycles reward patience. They punish reaction. Process matters more than conviction. We do not need to be early. We just cannot afford to be late.